What's up, guys? Welcome back to Taxes Made Simple. I'm your host, Karlton, and in today's video, we're going to be talking all about inflation, the one thing that you hear everybody talking about. The IRS recently published a list of tax inflation adjustments for the year of 2022, and taxpayer, if you're living in the United States, you need to be aware of these adjustments. You want to make sure you know them so you know how to adjust your tax strategy for these inflation updates. I want you to have access to this information so you can plan accordingly. Let's dive in. All right, guys, let's not be around the bush when it comes to this subject. The first thing that you should know about the inflation-related changes that the IRS just made is why are they making inflation-related changes in the first place? The reason why these changes are taking place is because inflation occurs regularly in the United States. So the IRS periodically has to adjust some of the tax limits. They have to adjust the rules, they have to adjust the guidelines, and they have to account for inflation. IRS's inflation updates are becoming increasingly more relevant because inflation is rising fast in the United States. In fact, inflation has been happening in this country at an accelerated rate ever since the pandemic began. You guys remember. This is because there has been a large amount of COVID-related stimulus spending that has taken place ever since 2020. You guys remember all of these stimulus bills and stimulus checks coming out. Well, this tends to increase inflation. And now you know a little bit more about why inflation is happening. I want to break down the important changes that you need to know. There are changes that have happened across the tax code in regards to inflation. So today we're going to break down some of those most important changes so you can adjust your tax strategy strategically. Let's dive in. The first place we're going to start off is the standard deduction. The standard deduction is the deduction that the IRS allows people to take in lieu of itemized deductions. Every year, the standard deduction is adjusted for inflation, and in 2022, married couples have a standard deduction of $25,900, up $800 from 2021. Now, if you're somebody that's married and you decide to file separately, you're almost filing like you're single. So you're only limited to the single standard deduction, which is now $12,950. This is an increase of $400 from the previous year. This leads us into the head of household deduction. If you're taking the head of household deduction, that means that you qualify to have a dependent on your tax returns on a yearly basis. The head of household deduction is now $19,400, up $600 from last year. This deduction is enabling a lot of taxpayers to reduce more of their taxable income heading into 2022, knowing that the cost of living is rising. Now, taxpayer, if you plan on using the standard deduction instead of itemized deductions, then you will be able to benefit from these increases that I am explaining to you. But you cannot take the standard deduction and the itemized deduction both at the same time. You can only choose one. So you want to make sure you understand what your itemized deductions are. Now, taxpayer, I'm not going to leave you on a cliffhanger and make you go research what itemized deductions are. I'm going to give those to you right now. But for the sake of this video, we're going to cover all of the tax update changes due to inflation. The itemized deductions are still the same, the same itemized deductions that you can deduct on your tax return on a yearly basis. Mortgage interest, just the interest, not your mortgage. Property taxes, the taxes that you pay for owning a piece of property, which means you have to own a piece of property. State taxes, which gets grouped into your property taxes, which is called SALT, S-A-L-T, state and local tax. You have your medical and dental expenses, only in excess of 7.5% of your adjusted gross income that you get to take on your tax return. And then of course you have your gifts to charity and any gambling losses that you might have had. That's it. Typically, I do not see taxpayers who do not have a home or that are young and don't have medical and dental expenses itemizing their deductions. I always see these type of taxpayers taking the standard deduction because the standard deduction is increased a lot since 2018. What happened in 2018? The Tax Cuts Jobs Act of 2018. You know, when Donald Trump and his administration was in the office making a lot of tax law changes, he wanted to help out the everyday taxpayer by doubling the standard deduction in 2018. And since then, we have experienced the inflation ramifications of that standard deduction going up each and every year since 2018. So the standard deduction is a deduction that you can take if you are choosing not to itemize your deductions. All right, guys, let's continue. The next of these updates that we need to know about is the personal exemption deduction. This one doesn't get me all thrilled because there was updates to this exemption back when the Tax Cuts Jobs Act was enacted in 2017 that went into effect. in 2018. The personal exemption was a $4,050 deduction. It was eliminated by the Tax Cuts and Jobs Act, so we really don't have to put a lot of stress on it. But the personal exemption has been eliminated for 2018 to 2025. The IRS has stated that there will be no changes to the personal exemption for 2022, and it will stay at zero. Marginal rates will be the next thing that we discuss, because this is a big change that happens on a yearly basis. Many taxpayers, including some of my wealthier taxpayers, always will message me right towards the end of the year asking for the tax law updates or asking for the marginal tax rate updates. Many people want to know, am I jumping up into a higher tax bracket, or are the tax brackets expanding so I don't end up in the highest tax bracket this year? So what we're going to do is we're going to break down all of the updates to the marginal tax rates. The marginal rate refers to the amount of tax paid for every additional dollar earned as income. So essentially, marginal rates refer to taxation percentages that people are taxed at in each tax bracket. For 2022, marginal rates will break down as follows, okay? The top tax rate will remain 37%. That's not changing, okay? That's for individuals, that's for single taxpayers with incomes greater than $539,900. Or if they're married, then it jumps up to $647,850. So those are the two amounts right there, and it remains at 37%. The other marginal tax rate beneath 37% is 35%. And this is for incomes that are over $215,950 or $431,900 if you're a married couple filing jointly, okay? That is the marginal tax rates for the 35% bracket. Right after the 35% bracket, beneath that is the 32% bracket. The 32% tax bracket is for incomes over $170,050 or $340,100 if you're married filing joint. Now, the tax bracket that falls underneath the 32% bracket jumps all the way back down to 24%, which is for incomes that are over $89,075 if you're single, or $178,150 if you're married filing jointly. Directly under the 24% is the 22%. This is for any income that you earn in excess of $41,775, or if you're married, then it's any income you earn in excess of $83,550. Now, we're getting into the lower brackets here now. We're jumping down all the way to the 12% bracket. The 12% bracket covers incomes over $10,275 if you're single, and then $20,550 if you're married filing jointly. The lowest rate is 10, and this is for incomes of $10,275 or less, and if you're married filing joint, you make $20,550 or less, then your money is being taxed at the 10% bracket. So those are the marginal tax rates. The marginal tax rates are important for us to understand because our income doesn't all get taxed in one tax bracket. We have to fill up all of these brackets to know exactly how much of our money is being taxed at 10%, 12%, 22%, 24%, 32%, 34%. That is how you calculate your taxpayer. So it's important ahead of time before heading into the 2022 year to know if the marginal tax rates are going to change due to inflation and how much they're going to change due to inflation. All right, guys, so the next tax inflation update is the alternative minimum tax exemption update of 2022. The alternative minimum tax exemption is $75,900. This exemption starts to phase out at $539,900. For married couples, the alternative minimum tax exemption begins at $118,100 if you're filing jointly, and then it doesn't phase out until you're making $1,079,800. Now, this may all sound a little bit weird to you why you're being taxed on all this money, but I want you to understand what the alternative minimum tax is. Under current tax law, certain tax benefits can significantly reduce the amount that a taxpayer has to pay. An alternative minimum tax solves this problem for the government. The alternative minimum tax is the tentative minimum tax over the regular tax that you're already currently paying. It's just put in place to ensure that certain taxpayers with economic benefits are still paying a sum of tax. And certain taxpayers who typically are subject to alternative minimum tax are some of my taxpayers who are getting stock incentive, restricted stock incentive, where you're getting access to stock at a very reduced price before that company goes public or before those stocks are exercised. If you're subject to alternative minimum tax, it is very hard to avoid the subject of taxation. You would need to focus on trying to create some type of losses to avoid this type of tax. All right, guys, the next tax inflation update is the Earned Income Tax Credit. The Earned Income Tax Credit is a tax credit that helps low to moderate income workers and families to access a tax break on their tax returns. And for 2022, the Earned Income Tax Credit is rising. It's rising to $6,935 for qualifying taxpayers who have 3 or more qualifying children. This is up. This is up from $6,728. So it's important that you know what these amounts are and whether or not you have children that could possibly help you qualify. The next inflation update is qualified transportation, fringe benefit, and qualified parking. In 2022, the qualified transportation fringe benefit and the limit for qualified parking is increasing to $280. That's important. Next, let's talk about employee salary reductions and contributions to health flexible spending arrangements, FSAs. Starting in 2022, the dollar limitation for employee salary reductions for contributions to health flexible spending arrangements is going to increase. It's going to increase to $2,850. So just be mindful of this if you have employees on payroll. Cafeteria plans are also changing. For cafeteria plans, this allows the carryover of unused amounts, you can carry them over to the next year. The carryover amount is now $570, and this represents an increase of $20 from 2021. The next update is medical savings accounts, because in 2022, people who have self-only coverage in a medical savings account will be required to have a plan with an annual deduction that is not less than $2,450 and not more than $3,700. This is a change from the 2021 limits, which were not less than $2,400 and not more than $3,600. So these are just some updates that are coming your way. I just want to make sure I'm covering every taxpayer. Let's talk about self-coverage. The IRS is making changes to self-coverage too. For self-coverage only, the maximum out-of-pocket expense amount is increasing from $4,800 to $4,950. And for family coverage, the annual deductible is not less than $4,950, which will be up from a $150 increase for 2021. But the deductible cannot be more than $7,400, which is an increase of $250 from 2021's limit. Now, for family coverage, the out-of-pocket expense limit is rising $300 from the 2021 limit of $8,750 to $9,050. So these are some of the medical changes that we saw coming our way as taxpayers heading into 2022. Next is the lifetime learning credit. For joint filers who use the modified adjusted gross income amount to determine the reduction in the lifetime learning credit, this is based on code section 250A-D2, the AGI amount will not be adjusted for inflation this year. The lifetime learning credit is getting phased out for taxpayers with modified adjusted gross income in excess of $80,000 or $160,000 if you're married. If you're foreign, we have some updates coming your way as well. Let's talk about the foreign earned income exclusion. All right, guys, the foreign earned income exclusion. The foreign earned income exclusion is a tax exclusion that is designed to prevent people who earn income in different nations from being taxed twice. Now, for 2022, the foreign earned income tax exclusion is rising to $112,000 from $108,700 where it was in 2021. Estates of descendants in 2022 also have some updates coming their way. Estates of descendants who will die will have a basic exclusion amount of $12,060,000. It was already $11.7 million last year, which was an exclusion amount that we have never seen before. You're starting to see some of these changes that are occurring. This means that this change right here is going to completely change the way attorneys and even tax professionals like myself do some of our estate planning. Many people will benefit from this development. Let's talk a little bit more about when you're giving gifts to people, because everyone has times in their business where they want to provide some gifts or times where they want to provide gifts to employees. If you like to give gifts to people, then you need to know that the annual tax exclusion for gifts is increasing to $16,000 for 2022. That's a $1,000 increase from $15,000. So what that means is if you are giving gifts in excess of $16,000, you're going to have to file a gift tax return and report it. And it goes against your estate, the exclusion that we just talked about. So it's important for us to understand some of these changes. You will be able to give even more expensive gifts to people you care about this year while still being covered by the tax exclusion. Just make sure that if you want to use the gift tax exclusion, that the value of your gifts do not exceed $16,000. If it does, then you will have to pay all other applicable taxes on your gifts. Now, I get asked a lot of times, is there any tax benefits or changes when it comes to adopting people? Adopting children does come with some tax benefits and some tax credits, and adoptions in 2022 have some updates as well. The IRS is raising the maximum of credit allowed for qualified adoption expenses to $14,890, where it was in 2021 at $14,440. So this is a small little increase in expenses that you get to take on your tax return for having a qualified child that you have adopted. Qualified adoption expenses include all expenses related to adopting a child that the IRS considers necessary and reasonable. These expenses can include adoption fees, court costs, attorney fees, travel fees. So if you're planning to go through the adoption process here in 2022, and if you make any of these expenses out of pocket, then you will be able to deduct up to $14,890 from your tax returns in related expenses. Being able to deduct adoption expenses can make it significantly easy to afford adoption as a child and reduce your tax bill at the same time. This is good news for anyone who wants to make an adoption for their family. Guys, to wrap this video up, unless the United States government stops increasing its currency supply, inflation will most likely continue year after year, which means these inflation updates will continue to come out year after year, and we can always see an increase. As a result, the IRS will most likely continue to make tax inflation updates every single year as they did this past year. And in order to keep your tax strategy optimized, you will need to continue to stay on top of these inflation updates and continue to make sure that you're partnering with tax professionals. Now, if you have any questions in regards to inflation-related tax changes, or if you need help creating an ideal tax strategy to avoid some of these inflation-related tax updates, then feel free to click on the link below to get in touch with my company, or you can schedule a link to talk directly with me. That's it for this video, and I just hope that you like it. If you did, please comment, subscribe, and also, if you're looking to avoid taxes strategically, feel free to visit our link below to join our Tax Alchemy Academy, where we teach everyday W-2 and real estate investors on how to use real estate to avoid all other forms of income. I'll see you in the next video. Cheers.